All right, hey guys, Sam here from TradeDevils-Indicators and TradeDevils.com. All right, today we're introducing our latest edition. This is actually an update to an indicator we've had in the lineup for some time. I think it's very much underappreciated, and so we've tweaked it, added a few things to it, and we're kind of rebranding it. We used to call it the TDU trailing stop, but we've changed that to the Devil's Friend. Now that is always a little bit of a mashup of a super trend, right, which is a commonly known and very popular indicator, particularly in Forex, because this is an ATR based indicator, right, so resembling a super trend, and then just kind of playing around with names, right, so for any of you Grateful Dead heads out there, right, if there are any maybe I'm aging myself out here, but for any of you familiar, the Friend of the Devil, very popular, very well-known Grateful Dead song here. So just in that little mashup of names, we're thinking Devil's Friend, Friend of the Devil, Trend of the Devil, and we ended up with the Devil's Friend. So just so you understand where that came from, not that that's really relevant. Okay, so here, what I have in front of us here, this is a 4,500 tick of the micro. Note it's the micro. This is particularly friendly to those of you trading micro. And as I've said, on several videos here, my view is any account less than 1 penny, less than 20,000, should be trading micros. My view, just from a lot of years of doing this. Very common for people to fund an account with 10,000. They go right into the micros or the E-mini. Pardon me. They go into the mini. And quickly they got a $5,000 account, right? It's just the risk is so high. The margin for error is so small, right? If you're trying to trade with a, I don't know, $200, $300 stop, could be a quick route to cutting your account in half, which is why we suggest here, particularly for something like a 4,500 tick, which is the idea is to slow the number of trades, right? So a very common problem is too much trading. Slow it down a little bit. So if you're on a 1 minute, maybe you go to the 3 or a 5 minute. If you're on a 2,000 tick, maybe you go up to a 4,500. Okay, so it's up to the individual what your preference is. I do prefer tick charts, but I will always keep a minute chart open, right? But my main entry is always going to be off of a tick chart because I don't want the noise that so often we see in a time-based chart. All right, so that aside, just in review, so 4,500 micro MES chart. I've got our initial balance on, as I will in every video, to frame the day, and just as a reminder, these are the most important levels on the board every day, 5 days a week. Most important levels, bar none, even more so than VWAP. Take my word for it, or do a little testing yourself. So again, just a reminder, you got to have it on your chart, draw it yourself, or use somebody else's, or use ours, right? But it has to be on the board, or you'll regret it. Okay, so that's it. Now, so this is the default, how it's shipped to you. So if you were to download it on a trial, it's going to land on your chart like this. Now, this is pretty dramatic here. This is a 10-period ATR. Pardon me. The ATR is calculated off of the last 10 bars, so a 10-period ATR. But we're using 5 times the ATR for the switch, right? So when we go from long to short. Now that's going to be a bit extreme, and here's an obvious example, right? So this is telling you to short it right here, and you're getting stopped out here. Well, that's 135 ticks away, right? So that wouldn't be necessarily the best use of this. Although in that same breath, you could look at this and say, well, hell, it's telling me to come here. It's telling me to get long right here and ride that, and well, there's 195 ticks, right? So did you make money on the day? Well, then we factor in, would you be trading down here at 9 o'clock into that long? Well, maybe, right? How about the day before? Again, right? I mean, that's a long distance from where it's telling me to switch. So let's assume some slippage. There's my stop right there. Well, that's 100 ticks, 103 ticks. Where'd you get stopped out, right? Right there. If you rode it all the way, right, through, and would you go past the end of the day? Let's assume you went to the end of the day. What'd you get there? 157, right? So it's not like this isn't okay. Well, this is not completely insane. At least it's the reason we do it that way is to kind of give you, all right, I get what's happening here, so let's see how am I going to improve that? How am I going to tweak that a little bit? Well, of course, the obvious thing would be, we only have 2 variables. It's the length of time. How many bars do we want to track that ATR? And then what's the multiple of the ATR? Well, let me make some suggestions here based on my own experience working with this. And then how I would use it, or maybe some suggestions, right? So some people are going to look at this and go, well, I don't want that color in there. Okay, right. I mean, depends on how much stuff you have on your chart. So if you were, for example, using like our market structure indicator, where it's going to be drawing all sorts of levels and order blocks and fair value gaps, so you're going to have a lot of stripes on your chart, if you will, and this could be problematic. It might blur some of them, so you may not want this little cloud to fill in. But if you were just looking at this here, now if you were just looking at this and you were using something as an additional filter, and this is just a 21 period McGinley, right? If you don't have a McGinley, put a 21 period EMA on, right? It'll be similar. Okay, let's just look at this and say, okay, well, so perhaps what I want to do is when the price gets above the McGinley and we turn green, oh, okay, well then I'm going to take those buy signals. And when the McGinley turns red and I get a sell signal, well, I'm going to take those. All right, well, boy, on this day, pretty good start, right? If you took it to when it went red, well, there's 150. We did the same thing here. I mean, again, I know it's hindsight. I know, right? Oh, okay, we'll take it till we green, right? But is it really hindsight, or are you just saying, oh, I'm going to take it to that? Right now, when you're right here, a little harder, right? Always easy, right? It's always so easy after the fact, right? I'm very aware of that, guys. So I try to approach this being very conscious of trying to avoid after the fact, right? Hindsight trading. But it's hard to do when you're demonstrating here. So what we're trying to do is make this like black and white. So there's no question in your mind, oh, so do I sell here? Oh, I'm not sure where I'm at that prior pivot. Do I want to sell here? Oh, isn't that a breakout? Oh, do I want to do that? This is like, okay, this is, I mean, you could automate this, right? If you're using Bloodhound, right? Simple. Okay, but let's not be that simple, and maybe 5 times the ATR is more risk than you would want to take, even in the micro. So let me clear this off, and we'll look at maybe fine-tuning this a bit. And then maybe do a little bit of manual backtesting here. Now, I'm trying to be mindful of the amount of time here because I'm prone to be long-winded here. So but let's just do this. So first thing I'm going to do here, let's just open up the indicator and look at the settings, and then we'll look at some adjustments, and then we'll do a little backtesting. All right, so hang on one second. So I'm inside the indicator now, and you can see here, these are the only 2 variables here that are going to affect what we see on the chart, and that is the period and the ATR multiplier. Now, many of you that might be using our market structure or some of our graphical order flow tools, we can change this, because the default that you'll get in those is going to be 14, which is an excellent starting place. Now, the ATR multiplier in those tools, and right, this would be a nice complement to those, is 2 times the ATR. So for market structure, when we get a swing that's twice the ATR, that will be a new swing. So I'm going to start at a 2. But what you'll find is that 2, you want to actually give it a little bit of a cushion on that. And there's a couple of different ways you can do it. One, and I would recommend this for micros, we can go to a 2.5 because we want to give it a little bit of a cushion. So if you were to see something like this, we just have this wick that goes through and then we come back down. You don't want to get wicked out. Now, it's going to happen, right? There are going to be times where it's going to happen here. We'll look at a few examples of that. But this is not a bad place to start with regards to fine-tuning to your own individual preference. So I'm gonna go ahead with 14. That's very commonly used, but instead of 2, I'm going to use 2.5 here. Now, the other choice you have is whether or not you want to see that fill, right? So in this particular case, because we're going to end up on some templates that will have market structure indicator on it, I'm going to take the fill off, right? So we're not going to see that, but we will. There'll be no question about what the appropriate positioning is in the market based off of these indicators here. Now, it gets a little bit, okay, when I lose that, is the McGinley, takes a minute, okay, to dial in here. Okay, where are we? Okay, so let's see if we can refine this a little bit. So with that change now, so that you'll note here, it's 2.5 times the ATR. Right now, all we're going to do here is just do a little manual backtesting, because I want this to be foundational for, okay, maybe I can pick up some ideas here. So there's 2 things to think about. One is stop placement, and the other is entry. Right now, while this lends itself to kind of black and white on-off buy-sell entries, that's not necessarily how you have to trade it. I mean, this can be, so look right here. So as we look at this right here, do you see what's happening here? The 21 McGinley is being broken, so thus the price breaks it, the McGinley goes red. As we're breaking this pivot, meaning that I've gone 2.5 times the average true range of the last 14 bars down. Okay, so this would be just a classic sell signal. Now, you look at it and you say, well, wait a minute. Am I going counter trend there? Well, yeah, you are. What do we have here, right? We got higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, so this is the first break of that sequence. But you certainly could look at this and say, well, oh, wait a minute. Now I'm in an uptrend. Do I want to be taking that? Because you're just it would be very reasonable to think perhaps I've got something like this happening. And in fact, that's what you get down here. So if we draw it up from the absolute low to the high, you might say, well, oh, maybe that's where an algo is going to fire here. And you might look over here. Oh, here I can see right over there. We've got a fair value gap. I mean, these are just little ways you might use this. Oh, looks like we didn't quite make it, right? We didn't quite get there. We have some structure here. We could probably look at that. So again, I'm just kind of giving you some ideas of how you might use that. Oh, well, let's see if I get that up on that pivot here. So you see this resistance here becomes the support. Right now we're in the pocket, right where we got a fair value gap here, and then we know this is an area where algorithms are going to be active between the 50 and the golden zone. So now here they get it right here. Okay, so let's just look at that. So if I took it here, and I'm going to use a default of a 50. Oh, here, let's do it this way. Let's do. Okay, let's do it this way. This will be easier. So I've just added to this our manual backtester, just so we can use this. Oh, maybe to generate some ideas for you, and this may very well be something that you would want to trial as well. So, for example, you could trial the Devil's Friend, right, and then trial the manual backtester if you don't own them already, and then do a little testing here. You could replicate what I'm going to do here. It's just the same idea. I might give you a few things to think about. Okay, so as a result of that, by adding the manual backtester, and I've got some hotkeys in here. So if I've got them set to my F12 and F11 key. So if I go Shift F12, that's going to tell me I'm setting up for a buy signal. And what that'll do is it'll give me a range here. So the max, let's see if I click on it, you'll see what I'm doing here. Oh, there we go. No, that's not what I want. I want this. You get hot for me? Oh, I guess it won't. Okay, well, you can see it right. Well, there we go. Okay, so you can see the stop loss is 25 ticks or 31.25. Remember, we're trading micros here. And this is just for a single contract. 1 micro. That's all we're going to test here is 1 micro. Okay, so let me get that off, and let me get that off. Right, so we might look here and you say, okay, well, why would I even want to be thinking about this trade? Well, aside from the fact that I can see that I've moved to ATR. I know, right? Let's be very mindful of the fact we're going counter trend. Note the McGinley has just turned red. So in essence, what am I doing here? Oh, if I can get that, just get you off to the side. Oh, let's do it this way. All right, so if I look here, this would be a change of character right there, right? So I'm breaking this sequence of higher high, higher low, higher high, higher low, higher high, higher low, right? This is the break. This is the change of character, right? If I use a little market structure language. So here's the change of character. In addition, the McGinley goes red, price crosses over it. In addition, right? I've gone 2.5 times the ATR. That's why you might consider that trade. Now let's use our manual backtester here. So in this case, I'm going to go Shift F11 for a sell. Now you have to make a decision here based on the greater or lesser of the two, depending on what your preference is. So if I took the short here and I go down here, well, you'll see that if I'm using, oh, I got to change that because let's get that one. So this was prior testing. Let's change that to 25, and let's template save that as my default. All right, so I've got both long and short set for 25. So here, let's just take that off, get everything off the screen. Okay, so here we're looking at this, right? So here you can see it very clearly here, just coincidentally, right, where we get the change of character. It's not break of structure, change of character. Right here happens to be when McGinley goes right. So you get the whole thing. Okay, so let's go F11. So I'm going to be looking to sell here, and my stop, I have two choices, right? I can either use the 25 tick. If I wanted the 25 tick to be my max, well, you'll notice here that the stop line at 2.5 times the ATR is greater than 25 ticks. You got to make that call, right? So let's just assume you're going to stay with the 25 ticks, right? So as we go down here, here would be, right, we're getting wicks beyond 2.5 times. So let's just assume you're trailing your stop. Of course, I'm going to assume many of you know you can just attach your stop to the indicator, which is what I would suggest the way to do this. Typically, you'd want a 1 or a 2 tick offset, so if it touches the line, you're not getting stopped out. But here we have wicks going through, and that's 2 ticks at least. So if not 3, so you're getting stopped out here. So you've got, okay, you made $21. Now the question is, do you continue in that trade? Because note what happens here. The McGinley goes green, but then we go red again. So here I get a little. You could make a case here. You've got a little change of character as you break that. But let's go ahead and take the short again. And of course, I can see the net result here, but you're not going to know that. So let's take it and see what we get. Right. So 25 ticks is the stop. Lesser of the two in this case happens to be right here. So let's say we're going to get stopped out there. So how am I doing so far? I got $6.25. Well, now what happened? All right, I'm not assuming you're going to take this trade. I'm going to leave that off the board because it's within the first 15 minutes, and typically people are going to let the first 15 minutes. Well, I shouldn't say that. I personally don't trade in the first 15 minutes, so I wouldn't have been taking that trade. I like that initial. Well, it's almost always a head fake. I like it to kind of get it expressed, and then we'll kind of let the day develop here and see how we're looking here. So from there, right? That's just me personally. So here's the next entry right here. So let's use our F12. Here's our entry here. So we're going to go, right? You'll note here 25 ticks. It doesn't get hit. Now where do I get out of that? Where do I get stopped out? Right now, note here, my assumption is that you understand here. So once we're in the trade, right, we're going to attach the stop to the ATR, right, to the devil's friend line, which is 2 times the ATR, right? So we're going to attach the stop, right? Up. Now look at the McGinley. Never. Well, pardon me. We train red right here, but we don't get stopped out. Green all the way, right to the close. $340 per 1 lot micro. How did my day end up? Right. So 346 single lot micros. All right. Had a little chop out here. Got a little chopped up here. And you say, well, okay, yeah. Yeah, sure. That's going to look great on a big up day on Friday. Great. Okay, let's go back a day. All right. I mean, do I even need to do it? Right? You can see what's coming here. Right. Okay. Here's the first. The backwash of the first. The initial open. Oh, what is that? That's 947. Okay. So let's leave this one off. Right. Let's not be overly generous to ourselves. Quite the contrary. When you're doing back testing, you want to be deliberately and consciously making an effort not to give yourself the benefit of a doubt. If anything, you want to do the opposite. Say, well, I'd have been stopped out there, and I would not like, oh, well, it only broke by a tick. So, no, be hard on yourself here because you want realistic results here. So in this case here, now I've got kind of mixed signals here. It's telling me to go short here, right as again we're kind of using the McGinley here, right as the McGinley is quickly going green and then coming back towards me. Now keep in mind, just because you take the trade doesn't mean you have to sit in it until you get stopped out. Now in this particular case, assuming here, right? So assuming you did a 2 tick offset on attaching the stop to the indicator, which I would recommend 2 ticks. That's what I use. I use a 2 tick offset here. Well, it touched the line. So if you're on the line, you're stopped out. If you're 2 ticks beyond the line, you're not stopped out until likely right here. But if I took this trade short and then I see this and then a higher low and then I get another break here, I may not stay in that trade. All right, so that's a little bit of a judgment call. You gotta make it yourself. So let's do that. Let's just assume that you shorted it here. Let's be realistic about this. And I'm going to say no. I'm going to get out. Right. So here's my short. There's the 25. Well, if the 25 tick stops would have done it. All right. Well then now here. Okay, where are you getting short next? See, this is where you have to use some judgment now. If the sell signal fires and your 25 ticks gets hit and you're stopped out because you don't want to risk more than $25 per single contract, whoa, if you don't have another way to get back in, well, look what that would be painful, right? To see that entire move unfold. Of course, you're not going to know that here, right? You don't know what's coming. Right, so my point being here, you've got to think about, okay, well, how would you get into that trade? Well, let's look at a couple of very obvious things, right? So, again, familiar with some of my teaching, all right? What are some of the things that we would be looking for? Well, here, this reaction at the 50 is not insignificant, right? I mean, that's just an algo firing there. So, okay, is that a trade you're going to take off of the 50? Maybe. It might be, but just because of the swing retrace and you're getting this reaction, well, okay, that's not a bad reaction. It's 64 ticks in a micro, but everything is telling you the opposite of that. So let's start with the devil's friend. Let's look. Well, the McGinley, again over here, you don't know what's coming. That's all you can see here. Oh, McGinley's gone green. I'm bouncing off of a 50. Well, now, okay, you wouldn't. So hang on a second. Let's get rid of that. Okay, so that wouldn't be there. So you're bouncing off of this 50. You're getting this price action here. Now you've got conflicting signals here. Right, the devil's friend is telling you want to be on the short side, but you've had a swing retraced 50 to the tick, and then you've had this reaction. So that's a little bit of you got to decide for yourself what you're doing there. I would most likely, well, it depends what I was trading. If I was trading micros, and this is very much designed for micros. There's not enough there in a micro trade, right? Well, maybe you take that, but just because of the mixed signals, I'd be reluctant here. I want all signals firing in the same direction here. So this question mark, right? So I'm just going to say no trade, or we could do no trade, or let's just call it a loser. Let's be hard on ourselves. So let's say we took just for whatever reasons, let's say we took that and we got stopped out because you didn't get far enough here, because you were looking for a target up here. It doesn't get there, so you're getting stopped out. So let's assume loser. Now, okay, so the next thing that happens here, we go right through the 65. So bears are in full control here. So we can now here, let's get this one off of the chart. All right, so with the break of that from swing low, swing high, we break the 65. Oh, bears are in full control. Okay, well, you're looking for a place to get in now. Right, now that's the struggle here. So this is reality, right? So this is not only reality of back testing. This is reality you're dealing with as you're trading through the day. How are you getting in? Well, what you'd be hoping for, of course, would be a retrace, right? You're thinking, oh, okay, give me a retrace so I can get in, right? It doesn't give it to you. So you got to look at some of it with this kind of a move, right? Again, you don't know it's coming, but with the break of that golden zone, you're looking for some other way to give you some insight into, oh, it's time to enter in the market. Well, of course, with one of the first things here with this day, this would be a tricky day. So what do you have anything really here? Not really, right? Unless you're taking something like this, a little break of structure here. This is about where the 65 broke. So there's nothing really here giving you that nice, oh, I can see the retrace. Now we're going to take it. Now here's the battle at the initial balance, right? I promise you, if you watch this enough, this is where the battle lines are drawn, right? Bulls and bears fighting here. Bulls desperate to try and get it inside. Bears want to keep it out, right? Brings in the higher time frame traders. They bring it down. Right, here's the battle, right? Can we hold? When it breaks, did you get anything down here? Right, so you got to look at this day and go, man, it just didn't give me any really good opportunity. So even if you were in down here going into the end of the day, you're trading in the last half an hour of the day. This one might have just gotten away from you. You didn't have. Well, let's just go back another day. Let's see. Welcome to trading. Right? Oh man, I was on the right side of it. Oh, I took that long there, and then it didn't give me another chance to get in. I mean, as I look at it here, and I can look at this and go, oh geez, wouldn't it be nice to show a nice way to get in here? But in reality, I would have not seen any way to get in there, other than just randomly sell it at the market, which I would not do. You didn't even get a retrace to the McGinley until right here. Right, you've had this whole move. Digress. Okay, let's go back a day. All right, so here, we're at 10 o'clock. So here's the first one. Let's do one here. Oh, again, we're not going to trade in the first 15, 20 minutes. So here let's get long here. All right, so remember 25 tick stop. All right, so here you would have that's exactly 3 to 1. So one choice is you're taking your profit here. Now, would you know that's going to be the pivot? No, of course not. Right. The other is you just take the stop. Right. So let's go ahead and use that. Let's not be overly friendly. Now look here. You got to look closely. There's 1 tick. There's 2 ticks. Right. So there it is again. This is just welcome to trading. Right. That's going to happen. There is no. You may say, oh well, I'm going to change it to 2.6. or 2.7 or 2.8. Well, you can play around with that. Maybe your comfort level is $50 per contract or $40, right? You can give it a little bit more room. At 2.5, you're stopped out here, right? And then you have the same problem, right? So this is the reason I'm taking you through this here is because you're going to go through the same thing when you're back testing this or when you're trading it here. So I want to address this here rather than have you buy it or trial it and go, oh man, I can't see a way to make this work. Well, okay, let's do the exact same thing right here just for this exercise. How am I doing on time? Oof. Okay, so you're in here, stopped out. Now you have a sell signal here, so let's take the sell and see what happens. All right, so McGinley's gone red, so I'm taking the sell. All right, there's my 25 tick stop up here. Right now, am I hit? Am I hit? Am I hit? Where does this get stopped out? Right there. Right, 25 tick stop never got hit. Now, if you're attaching the stop to the McGinley, you're stopped out here. Right? Do you see that difference? Because this is something you got to make that choice. This is a hard choice. Or welcome to trading. You got to make the choice because once you're down here, it would be very typical to attach the stop plus 2 ticks. How much is that? Just out of curiosity. Did we get 2 ticks there? That is 6 ticks, right? So it's bigger than you think. Remember, 4,500 is a little deceptive to the idea. So there's 6 ticks. So you're definitely stopped out there. Definitely. But if you entered here with a 25 tick stop, right? Do you see the question there, right? Are you moving your stop to trail on the indicator? If so, you're stopped out there, or are you just staying with your initial 25 tick? Because the risk didn't increase here. You would have given back some profit here, so you'd be out at maybe a 5 tick loss. But then you have the same problem again. Okay, wait a minute. How do I get back in? All right, so that's I can't give you an easy answer here. You got to make a decision, right? So I typically will, less of the two, right? So if I were gonna if I got here, well shit, right here you could have been stopped out because that could be 2 ticks. You could have been stopped out right here. But if I'm in that initial range of the entry here, and I'm it's 31.25. If you're comfortable with 31.25, I might not move that just yet. But by the time you got down here, you probably would. Right? By the time you're here, you've got 6 to 1. I'm likely going to move that to attach it, right? Hoping I'm going to get the runner to go all the way. I'd probably move it here, reduce the risk where you're stopped out. So let's assume that. Let's assume you got stopped out. Now, how are you getting back in? Right? You're going to take it. You might look at it. I know this is tricky, right? Because we tend to fool ourselves. You say, oh, I would take the break of that structure. Well, I'd be a little reluctant to because the IB low hasn't been tested, right? So I don't have that much distance. Well, 32 ticks, there's $40. Okay, maybe, but I know this is, well, you can see it, right? I know this is natural support. In this case here, McGinley's red. I mean, you're going to have to kind of fuss with this a little bit and play with it and see, okay, well, what would you do? Could you take it here? Well, if you took it here, let's just kind of play with that. Right? This is, I would suggest you do something similar. Okay, here's the break of structure, right? There's my 25 tick stop. Okay, where am I? Right? How are we doing so far? Right, 375. Right, this is single lot micros, and I'm trying to be harsh, not accommodating, to give myself a better result. I'm assuming you move the stop here. I'm assuming you got stopped out on all those. Now, how about here? Well, you're taking a counter trend trade, right? We know just something simple like that. We know we've got a downtrend, right? Here's the pivot. Okay, well, here's the makings, right? We talk about this a lot. All right, here's the makings of a trend change. Well, it's been lower low, lower high, lower low, lower high, lower low, right? All of a sudden, what do I get? Right? I get a higher high. Now I get a higher, I get a higher low. Now I get a higher high, right? So is that, oh, what do we hear? Oh, higher low. Oh, higher high. Oh, higher low. Oh, higher high, right? So the trend changes. So let's do the same thing here, right? So again, understanding that after this higher low, this might be a time to look to get long. I get the trigger here. Note the McGinley goes green. Right, so I'm going to take that trigger. So let's go F12 here. So I'm going to here's the bar. Right now, 25 ticks or getting stopped out by the ATR line. Right? No. You're going to take it all the way to the close. well, it's not, maybe, right? Maybe you did. Maybe you got, portion of that. Let's just assume you took it to the close. No reason to get out. If you were trailing with your stop, it's right here. That's 3 days. All right, that's 3 days. Okay, we're trading one lot micros. Very little of a filter other than we're just using the 21 McGinley. Okay, we're at, what have we had? We've had 9 trades in 2 days. Oh, let's see, pretty good numbers here. Win rate is 55. Net profit after fees, because I do have commissions in here of 398, I think. We're at 515. Okay, so let's look here. Okay, you're not going to take the first few minutes, right? I'm going to assume that, right? So here, here's by the time we get here, here's 10 o'clock. Okay, so here is the first sell. Now, what you look here and say, oh, but there's the IB. Well, we would not be there at the IB yet, so let's go ahead and take that. This would not be locked in as the initial bounce. Well, note the resistance, right? Again, the most important numbers on the board every single day. You have to know where they are. Okay, let's go ahead and take that one. So F11, right? Let's not do any hindsight. So let's assume slippage. Right, so let's not take it right on the line. Let's do at least 2 ticks of slippage. Okay, well there's 7 to 1 on your micro trade. 7 to 1. All right, are you happy there? Well, let's assume you're just going to attach it. Right, that's what you got. Right now, I've got a buy signal here. Let's take it because this is that's after the first test of the ATR. Pardon me. This is after 10:30, so this is after the IB has been set. So this is the push down. This is they're trying to get back in. So let's take the long and accept the stop. So let's take the long here, which would be right here, and we're going to get stopped out. So it's going to hit the 25 ticks before you get the next sell signal. All right, so loser. Okay, next is a sell signal. Okay, so I'm going to go shift F11. Here's the sell. Let's assume the worst possible fill. Right, there's my 25 ticks. All right, I'm going to down. Here I'm getting stopped out right here. Okay, now I'm going long. Now, granted, let's be very, very clear about this. Right, you got to be real comfortable with the fact that you're going counter trend. Now, if you were looking for a signal that you're on the right track here, the higher low here, right, is going to help. Higher high, higher low, higher high. Oh, wait a minute. Oh, but it kept going. Okay, so let's look here now. Are you ready to take this? Well, there might be other things that you're using. This might be, you might be seeing something on a 15-minute. You might be at some structure. It might be a demand zone. There's a lot of things that could be here, but let's just go ahead and let's just say you took the trade. So let's stay with it. So that's F12 here. You're going to get this fill, stopped out. Okay, stopped out. Now, are you going to go again? Maybe not. Maybe you've got a little one here. Well, I can see a reason that you might. Right here. Right, so we see a little measured move right here. So, right, so again, this is where you can't rely on the little buy button here. You got to identify. Oh, look at that! I've swung up. I've retraced right to the golden zone. McGinley's green. Right, you got to be able to take that trade. Now let's just take it to the target. So let's go F12 here. Let's assume a shitty fill and go right to target. Okay, well there's $70. That's 56 ticks. It was 2 to 1. Right, of our 25 ticks. Right, look, the 25 would have been just below the 65. All right, so let's just assume we got that. Okay, here's a sell. Let's assume we're gonna take that and we're gonna get a loser here. Right, so we're gonna get stopped out there. Got a winner here. Or pardon me, what do we? Maybe we don't. So here, let's assume worst possible fill. So we are going to be stopped out right here. And let's go F11 here. Worst possible fill. We're going to be stopped out right here. All right, let's get on the long side, and now we're going to go F12, and let's assume a terrible fill here. 25 ticks, riding it into the close. Well, what time is that? We're after 4 o'clock. There's about 4 o'clock right there. Okay, so how are we doing on we've been trading for 3 days. We've had 18 trades. Total net after fees is $795. Profit factor 4.83. 10 winners, 8 losers, right? So why are we so profitable? Right, money lost when we lose is much less than money made when we win. Okay, let's finish up here. What? No, we got Tuesday was a nothing happened until the overnight. Oh, but let's go with Tuesday. Here's a typical range day, completely right, absolutely no range, completely self-contained until the very end of the day when we had news. So we're completely self-contained here. So all of the move is in the early morning here. Up we go. So you're not going to trade in the beginning. No, this doesn't look like it's a great day here. So here we're after 10 o'clock. So here's a buy. Let's go ahead and stay with it. So here's a buy right here. Let's assume a lousy fill. You're going to get stopped out here. Let's go F11 for a short. Right? You're going to get stopped out here. Now, can you go again? Right? This is still telling you bias is down. Look at the McGinley. Okay, let's. Right, you got to be prepared to go again. We could take the break of structure here. So let's take that and stopped out there. Right here, F12. Let's assume a lousy fill, and you're going to get stopped out here. F12. Not much of a day. Pardon me. It says sell, so this is F11. So terrible fill. You're going to get stopped out pretty quickly with your 25 ticks. Here's a buy. That's going to be another loser. We can see this one here. 25 ticks stop you out. Just a shit day. Another one, another loser here. If you're taking these, right? 25 ticks. Okay, so what did we do to our tally for now? 4 days. So let's go back to Monday, and we'll finish out the week, see how it looked, and then maybe we can refine this a bit. Okay, the initial. This one happened pretty fast. All right, so here's 10 o'clock. Boy, this is. That's a real judgment call as to whether or not, given this, right, there would have to be more there for me to want to take that counter trend trade. But okay, let's assume you did, right? So you're going to take this and get stopped out, right? Now you're going to take this short. Let's assume a lousy fill. Oh, right here. All right, so there's a buy right here, lousy fill, stopped out. Oh, you would have been, it's come back down. So here we go. Where's our 25 until we got to right here. And you get one last sell there. And it looks like that's going to get, you're going to get stopped, well, you're going to get a slight winner there. You're at the end of the day. Okay, so there's the week. I think we got the whole week. And trying to be not overly generous here, quite the contrary, right? So trying to deal with some of the realities of, okay, if I'm using my stop, right, if my stop gets hit or if the ATR gets hit, how am I going to respond to that? And so for the, we went back, I've got a total of seven trading days. I'm not going to go back any further. I think we only have, did we do 7? Shit, I thought we only did 5. Anyway, so okay, we've got a tally here of 798.75 after fees trading one lot micros. All right. Anybody comfortable trading 2 or 3 lot micros? Right, again, 31.25 is your risk. If you're trading full size, likely your risk is closer to 12, 14, 16 ticks. You're trading 2 and 3 lots. Those get to be really, really expensive, right? So your margin for error, you take 2 losers in a row, you're probably done for the day. Again, it's all relative to account size. We have many traders that are trying to qualify for these prop trading programs. We have a lot of traders in the Apex program. So this is a great example of kind of burning that into your mind, right? So anyone who's tried to work through any of those qualifying rounds know that the killer is the trailing drawdown, right? That's what makes it so advantageous to the people that are offering you that money, right? Careful there. It's very advantageous to them because most traders can't sustain the drawdown requirement, right? It's too easy to have a one day turn into a bad day. You cannot have 2 bad days in a row. You're blown out. So that's why they do it, right? Trust me, they're making money. Okay, so I think we got this pretty well covered. This is really a nice tool. This combination of the manual backtester and this the devil's friend, right? The ATR based. Call it a trailing stop or a super trend or the devil's friend or the devil's trend. We're just trying to give it a less boring name. Yeah, do a little experimenting. And I think what you'll find is that if you use some filters here, so for example here, and I'll wrap up here. So let's go, oh, shit, where would I have something I would use? That's the default. Well, here, for example, let's go into, this might be worthwhile over here. So here I'm back to the default. All right, I'm back to the default. And you might say, okay, well, I'm going to keep this on here because all I'm going to use is, okay, I'm going to use just what I see here. I'm going to use a 21 McGinley or a 21 EMA. I'm certainly going to have the initial balance because I know how important that is. And I'm going to have either auto fibs or measured moves, something here where I can see where that algorithm is fired. And so you might look at that and say, okay, well, if I see this algorithm set up to fire and I've got this light blue background, well, I know it's bullish, I'm going to take the long. If I see that it's fired here, because this would be, oh, that looks like that's a 50 here. Let's look at that. Looks like that's from the low. I think it is. Right, so here's a 50. I'm in the pocket, right? And that actually goes to target. Right? It's red, right? Am I going to take that? How about this one? Here's another one, still red. You taking that? Right. Again, you don't have to use 5 times the ATR, but where can we see where that might have worked for you, right? So we look here, we go up, here's a retrace again. We're in the pocket here, but now it's blue, right? And there's the target. I get another one. Right? So before you're quick to dismiss the defaults, there they are, right? Boom, boom, boom. How about coming down, right? So I'm only going to take it if I've got a red background here and I get my setup here, which the auto fibs, of course, will show you in real time. Here's one. Would you take it? Right, if you're strict about this, probably not, right? It's firing while it's blue, and there's nothing on the way up. All right, but I got 1, 2, 3, 4 in a row here on the way down, firing when it's got up this, what is this, coral background. You taking this one? This one, how about, well, that's pre-market. Are you taking this one here? That's a short, but it's blue background. Red. No. Yes. No. Yes. Right, see, all I'm doing is, okay, if it fires, if I know it's there and I got a 50 or a golden zone and the background's blue, yes. Right, another way to take it. What do I got here? This would be another way to do it. Here, this is a template that I use often here, so I've just attached it here to this template. So here again on Friday, so here now I've got the market structure indicator, and I've got our order flow from the graphical order flow. I've got our order flow zigzag on this. So again, I'm matching. So the swings here are 2 times the ATR. So I know if I get a retrace here that creates a histogram down here, I know that that's the volume, and this was 2 times the ATR. I went that far. That's what creates the new swing. So as a filter that I might use for this application here would be, where are we with regards to, that's a 55 McGinley, right? We call it the McGinley River. Okay, so where am I with regards to price relative to the McGinley River, right? Or you could throw on a 50 period EMA. It would be comparable. Okay, well, so if I get a retrace, something like this, and I'm using either order speed here, or I'm using the buy sell here. I mean, I'm using something with regards to the market structure here. So I've had a retrace, I've come back to a fair value gap or a demand zone or an order block, whatever the case might be. If I get this retrace here and then I get a kick, it's kind of the same idea, right? Okay, well, so here's a potential long. So we take the break of structure here. All right, so what have I got there? Well, there's 66. There's 6 to 1 to the target. Remember, 25 tick stop here. We're still on micros. Retrace, it stays above. Can you go again? All right, look at the delta, right, or the cum delta here, which I'll use, right? So a lot of times I'll have this really emphasized here, almost as much as the price chart here, because this is what I'm watching, right? This is, God, here I'm getting all over the place. Right, look how we get the contraction here. consistently, you see this contraction, right? This is essentially what a squeeze is, but we're just applying it to the cumulative delta, right? So I get squeeze, and then out of the squeeze comes the expansion, right? So contraction, expansion. Look at the Bollinger Bands. Contraction, expansion, right? Over and over again, contraction, expansion, right? So what I'm really watching this throughout the course of the day. Here's another one, contraction. So look what happened. Look while we're retracing. Look what's happening, contraction. Now the other thing to keep in mind here is something that's really, here I'm all over the place here. That center line, right? When we're above the center line. Right, I want to be long here if I can, when I'm pushing the 2 standard deviations of the Bollinger Bands that are around the cumulative delta. Well, that tends to be a time to, right, when we're pushing 2 standard deviations, right, outside of the Bollinger Bands here, 2 standard deviations. This might be another one. This is a nice little template here. I trade this all the time, right? So on a 4,500, I want to slow it down. I'm looking for fewer trades. This is the same setting here. I'm 2.5 times a 14-period ATR. See, I mean, this really, it addresses the single easiest thing to say in trading and the hardest thing to do. What is the #1 first thing people tell you? Oh, you want to be successful in the market? It's very, very simple. You let your winners run and you cut your losers short. Boy, is that easy to say. Right? Not so easy to do, right? Particularly if you're trading full size, because the swings, you can be up 300, down 500, up 400, down, right? So fast that, you know, it's really difficult to trade the full size. Let's say you had a $21,000 account, right? I use my 20K limit. You got a $21,000 account and you're trading 3 lots in a full size. Boy, you better be good every day, right? Because if you're trading 2 or 3 lot, you're using, say, I don't know, 16 tick stop. Boy, those are expensive stop outs, right? So that's why I really think this lends itself so nicely, because in micros, right, what's not an option? Scalping, right? So if you're trading micros, it forces you to be looking for 5-to-1, 6-to-1, 7-to-1, those kind of targets, those kind of levels to be hit, because you can't scalp, right? You can scalp, right? If you're a good scalper, you can scalp in the full size, right? You might be after 4 or 5 ticks, but you can't do that in micros, right? The trading costs alone would just bury you. So you've got to get something that's going to let you stay in for these longer runs, right? Oh God, I mean, this is not a bad example on Friday. Let's bring this down so get some perspective, right? So one of these kind of runs, right? That can make the difference of your whole week. Shit, that can make the difference of your whole month. You know, I mean, is it realistic to say, oh, I'm going to stay long until the very end? Well, that's 345 per contract. Micros. Could you have stayed? Well, look at it. Could you have done it? Could you have done it? Well, if you attached your stop to that ATR, right? You almost, there's no way not to do it other than you getting out early because you couldn't resist the temptation, right? So something like this happens, you're like, oh shit, it's going to get me, right? And that's, I think, just as painful, if not more painful. Oh, you made a, you got a decent trade here. Did you have a winner? Yeah, you had a winner. Oh shit, I don't know if it's going to let me do that. Maybe it will. Okay, so let's say you took it to right here. Okay, $53 a contract. It didn't break. Now the question is, really, so let's assume you did that. What is the mechanism you have, right, with this going to help you get long again? That's the next question, right? So a retest here of the IB high, right? If it was resistance, now it's support. I mean, here's a look, guys. Look, I teach this every day, right? This is probably the least understood. Okay, the IB high is a battlefield, right? Every day, this never changes, right? So we're tagging it here. Oh, it's not set yet. So now here's the first test, right? Here's this trade that I've been teaching for many years now, first test of the IB high, right? Now this is a scalping trade, right? So it's not really appropriate for micros, but there, if you're in the full size, perfect scalp. Great example. What'd you get there off of that first test as it comes back? I can't even see it. That's 60 ticks, right? You do that in the full size, right? You may be done for the day. Okay, so there's the first test of the IB high. Up, now we break, we come back. Oh my God, talk about natural support. But the whole time, right? At no time did that that either your 25 tick stop or if you attached it to the ATR. See, this is the whole point of this indicator, right? So that you can stay in for all of that. That's very hard to do if you're just kind of tracking with your mouse and you're like, okay, I'm going to put my stop here. I'm going to say very hard to do because each of these pullbacks, you're thinking, oh shit, I'm going to give it all back. Right? That's the point of this. So the ideal way to trade this actually is to try and remove that from the equation. So if you were, for example, maybe you're trading 3-lot micros, right? So you've got to maybe use 3 to 1 or 4 to 1 for your first two, and then you attach a runner just in case you get one of these, because that makes all the difference, right? Look, right? You've got to get one of these. Well, I shouldn't say it that way. Ideally, what you're looking for is one of these trades that just runs on you. And we have such insane volatility right now. I mean, my God, it's absolutely unbelievable. Look at a 15-minute. Look at the volatility we have here. This is crazy, crazy volatility. I've been doing this for close to 30 years. These are, I mean, this is just whoa, massive volatility, right? So you look at it after the fact and it's like, oh my God, all I need to do is just buy it down here and just stay long. Well, wish it was that easy, right? But you got to understand the volatility that we're trading in right here now is, well, let's call it extreme. So that said, it's because of that, there's great opportunity here if you can let something run, because they run so far. If you can do it, right? Not so easy. Again, easier said than done, right? Very hard to do. That's the point of this indicator. All right, guys, I've rambled on for long enough. Okay, this would be a great thing to demo. Test it out. Put it on whatever template you're using. Work with it. Again, as I tried to do it here, don't be overly friendly to yourself, right? Be harsh on yourself. What would you know yourself? What would you take that trade? Where would your stop be? Right, be realistic in how you're approaching that manual back testing, but I think what you'll find is you'll like the numbers here. I just did 1 lots here. So how many of you that are trading micros, if at the end of the week you did $800, are going to be disappointed? My guess is the next week you're going to think, maybe I'll go to 2 lots. All right, guys, lots to think about. I hope this helps. Take advantage of the holiday promo that we're running here, and with that, I wish you guys good trading, and we'll see you on the next time.